Question 1. Which of the following is a key characteristic of a whole life insurance policy? A. It offers coverage only for a specified term after which the policy ends without any return. B. It provides coverage for the entire life of the insured with a savings or investment component that accumulates over time. C. It allows policyholders to change the face value of the policy every 5 years. D. It covers the policyholder for a set number of years with premiums that increase as the policyholder ages. Answer B. It provides coverage for the entire life of the insured with a savings or investment component that accumulates over time. Explanation: whole life insurance is a type of permanent life insurance that provides coverage for the lifetime of the insured provided premiums are paid. The policy includes both a death benefit and a cash value component that grows over time. The cash value can be borrowed against, used to pay premiums, or withdrawn. Question 2. Sarah, a producer, is approached by a client who wishes to purchase life insurance for their spouse but does not disclose certain pre-existing health conditions. Which of the following should Sarah do in this situation to remain compliant with Montana's insurance regulations? A. Sarah should disclose the health condition herself, regardless of the client's wishes. B. Sarah should inform the insurer about the health condition, but not ask the client for further details. C. Sarah should inform the client that failure to disclose such conditions may result in policy denial and advise full disclosure. D. Sarah should proceed with the sale without addressing the health condition, as it is the client's responsibility. Answer: C. Sarah should inform the client that failure to disclose such conditions may result in policy denial and advise full disclosure. Explanation: in Montana, as in most states, insurance producers are required to ensure full disclosure of all relevant information to the insurer, including pre-existing health conditions. Failure to disclose material facts can result in claims being denied or policies being cancelled. Sarah must inform the client of the importance of full disclosure and the consequences of failing to do so, thus adhering to her duty of fair dealing and fiduciary responsibility. Question 3. What is the primary purpose of the grace period provision in life insurance policies? A. To allow policyholders to make premium payments after the due date without penalty. B. To permit the insurer to cancel the policy without notifying the policyholder. C. To provide additional coverage if the insured is unable to pay premiums during the policy term. D. To extend the length of the policy after the insured reaches a certain age. Answer A. To allow policyholders to make premium payments after the due date without penalty. Explanation: the grace period provision in life insurance policies is designed to protect policyholders by providing a period, usually 30 days, after the premium due date during which coverage remains in force. If the policyholder fails to make a payment on time, the insurer cannot cancel the policy immediately. This allows the insured time to make the payment without losing coverage, ensuring that accidental lapses do not result in a loss of benefits. Question 4. Which of the following is a characteristic of universal life insurance? A. It provides fixed premiums and guaranteed death benefits throughout the policy term. B. It combines a flexible premium structure with a savings component that can accumulate interest. C. It offers permanent coverage but does not accumulate any cash value. D. It provides coverage for a specific term and includes an investment option with no cash value. Answer B. It combines a flexible premium structure with a savings component that can accumulate interest. Explanation: universal life insurance is a type of permanent life insurance that offers flexibility in premium payments and death benefits. The policy has an investment component with the cash value that grows at a variable interest rate. The policyholder can adjust the premium amount and death benefit, providing more control compared to other life insurance policies. The cash value grows based on the interest credited by the insurer, though it is not guaranteed. Question 5. Which of the following is an example of an insurer's duty of disclosure under Montana law? A. The insurer must disclose the applicant's personal financial information to third parties. B. The insurer must ensure the accuracy of all representations made by the producer during the application process. C. The insurer must guarantee approval for all applicants, regardless of their risk profile. D. The insurer must return all premiums paid if the policyholder cancels the policy within 30 days. Answer B. The insurer must ensure the accuracy of all representations made by the producer during the application process. Explanation: under Montana law, insurers have A duty to ensure the accuracy and truthfulness of all representations made during the application process. This includes verifying the information provided by the producer and ensuring that the applicant's health and other material facts are disclosed accurately. Failure to meet this duty could lead to denial of claims or the cancellation of the policy due to misrepresentation. Question 6. John, a life insurance producer, is reviewing an application for life insurance. The applicant has a medical condition that was not disclosed. What should John do to comply with Montana's insurance regulations? A. Proceed with the sale and let the underwriters handle the undisclosed condition. B. Inform the applicant about the omission and request correction before submitting the application to the insurer. C. Submit the application as is and wait for the insurer to investigate the condition during the underwriting process. D. Reject the application immediately based on the omission and refund any premium payments made. Answer. B. Inform the applicant about the omission and request a correction before submitting the application to the insurer. Explanation. Under Montana regulations, it is the producer's responsibility to ensure that all material facts, including medical conditions, are disclosed. John should inform the applicant of the omission and advise them to correct the application before submitting it to the insurer. Failing to do so could result in the policy being voided or claims being denied due to non-disclosure of material facts. Question 7. Which of the following is not a reason an insurer may deny a claim under a standard homeowner's insurance policy in Montana? A. The property was damaged due to an excluded peril such as an earthquake. B. The policyholder failed to pay premiums within the grace period. C. The policyholder failed to file a claim within 90 days after the loss occurred. D. The property was damaged by a covered peril, but the policyholder did not file an updated inventory list. Answer. D. The property was damaged by a covered peril, but the policyholder did not file an updated inventory list. Explanation. In most homeowners insurance policies, coverage is based on the loss from a covered peril, such as fire or theft. Failure to file an updated inventory list does not typically result in claim denial unless specifically outlined in the policy. However, an insurer may deny a claim if the damage results from an excluded peril, such as an earthquake, if premiums were unpaid even within the grace period, or if the claim was not filed within the stipulated time period. Question 8. What is the primary function of an insurance underwriter? A. To provide financial advice to policyholders about which insurance policies to purchase. B. To assess and evaluate the risk of insuring a policyholder and determine the terms of coverage. C. To handle claims and ensure that settlements are paid in a timely manner. D. To market insurance products to potential customers and clients. Answer. B. To assess and evaluate the risk of insuring a policyholder and determine the terms of coverage. Explanation. An underwriter's primary function is to assess the risk posed by a potential policyholder and determine whether the insurer is willing to provide coverage. They review the application, medical records, financial information, and other relevant factors to determine the appropriate terms, such as premium amounts and policy exclusions. The underwriting process helps ensure that the insurer takes on an acceptable level of risk. Question 9. According to Montana law, which of the following is considered an unfair trade practice in the insurance industry? A. An insurer offering a discount for customers who bundle multiple policies. B. A producer misleading a customer about the benefits of a policy in order to make a sale. C. An insurer adjusting premiums based on the insured's claims history. D. An insurer refusing to renew policy after specific term expires. Answer. B. A producer misleading a customer about the benefits of a policy in order to make a sale. Explanation. Under Montana law, misrepresentation or fraudulent practices in insurance sales are considered unfair trade practices. A producer misleading a customer about the benefits or terms of a policy in order to secure a sale violates the rules governing ethical conduct in the industry. Such practices could result in disciplinary actions against the producer or insurer involved, including fines, license revocation, or civil penalties. Question 10. Which of the following best describes the concept of risk management? A. The process of avoiding all possible risks to eliminate the need for insurance. B. The identification, assessment, and prioritization of risks followed by coordinated efforts to minimize or control their impact. C. The process of transferring all potential risks to an insurance company through policy purchase. D. The use of insurance policies to increase financial returns through speculative risk-taking. Answer. B. The identification, assessment, and prioritization of risks followed by coordinated efforts to minimize or control their impact. Explanation. Risk management involves identifying potential risks, assessing their likelihood and impact, and taking steps to mitigate or manage those risks. These steps include the use of insurances, a tool for transferring certain types of risks, but also focus on other strategies like loss prevention, risk avoidance, and risk reduction. Risk management aims to minimize potential losses while maintaining a balance with the overall business or personal objectives. Question 11. Under Montana's insurance regulations, what must an insurance producer do if they receive a complaint about an insurer's claims handling process? A. Ignore the complaint unless it comes directly from the policyholder. B. Inform the insurer about the complaint but take no further action. C. Submit the complaint to the Montana Department of Insurance for review. D. Tell the client to contact the insurer's legal department directly. Answer. C. Submit the complaint to the Montana Department of Insurance for review. Explanation. Under Montana law, insurance producers are required to submit complaints regarding claims handling to the Montana Department of Insurance (DOI) for investigation. Producers must ensure that customers' grievances are addressed appropriately. Failure to do so could result in penalties or disciplinary actions for the producer, and the DOI is the primary regulatory body for handling such complaints. Question 12. Which of the following is not a factor used by an underwriter to assess the risk of a potential policyholder in Montana? A. The applicant's credit history. B. The applicant's medical history for life or health insurance. C. The applicant's family history of chronic diseases. D. The applicant's occupation and activities. Answer. C. The applicant's family history of chronic diseases. Explanation. While an applicant's medical history, including pre-existing conditions, is a common factor in underwriting, family medical history is typically not a key factor unless it is directly relevant to the applicant's health risk, e.g., genetic conditions. Underwriters primarily assess personal and professional risk factors, including occupation and lifestyle choices, which may affect the likelihood of claims. Question 13. In Montana, what must an insurer do if they decide to non-renew a policy? A. Notify the policyholder only if they request it. B. Notify the policyholder at least 30 days before the policy expiration date. C. Inform the policyholder only if the policyholder fails to pay premiums. D. Provide written notice to the policyholder only after the policy has been cancelled. Answer. B. Notify the policyholder at least 30 days before the policy expiration date. Explanation. Montana law requires insurers to provide written notice to policyholders at least 30 days before the expiration of their policy if they decide to non-renew. This gives the policyholder adequate time to seek alternative coverage. In cases of non-payment of premiums, the insurer must still comply with notice requirements and give the policyholder a grace period before cancellation. Question 14. Which of the following is a common example of an exclusion in a homeowner's insurance policy? A. Damage caused by fire. B. Damage caused by earthquakes. C. Theft of personal property. D. Water damage from burst pipe. Answer. B. Damage caused by earthquakes. Explanation. Earthquake damage is commonly excluded from standard homeowners insurance policies. Homeowners who want coverage for such damage typically need to purchase a separate earthquake endorsement or policy. Fire, theft, and water damage from burst pipes are generally covered under a standard homeowners policy, though certain conditions may apply. Question 15. A policyholder in Montana has a car insurance policy with liability coverage. What would be covered under the liability portion of the policy? A. Damage to the policyholder's own car. B. Medical expenses for the policyholder. C. Property damage and bodily injury to others caused by the policyholder's driving. D. Loss of personal property inside the policyholder's vehicle. Answer. C. Property damage and bodily injury to others caused by the policyholder's driving. Explanation. Liability coverage in auto insurance provides protection for the policyholder in the event that they are responsible for causing property damage or bodily injury to others while driving. It does not cover the policyholder's own vehicle or medical expenses, which would typically be covered by comprehensive or collision coverage. Question 16. In Montana, which of the following is the most common reason an insurance claim might be denied? A. The policyholder filed the claim too soon after the policy was issued. B. The claim was for a covered peril but was under the deductible. C. The insurer found that the damage was not accidental. D. The policyholder failed to complete an insurance survey. Answer. C. The insurer found that the damage was not accidental. Explanation: insurance claims are often denied if the damage was deemed intentional or due to willful negligence, such as in cases of fraud, vandalism, or accidents caused by reckless behavior. If the damage is accidental and covered by the policy, the insurer generally cannot deny the claim unless other conditions, such as fraud or non-compliance with policy terms, are present. Question 17. Which of the following would be an example of a moral hazard in the context of insurance? A driver who speeds and increases the risk of an accident. B. A homeowner who installs a security system to prevent theft. C. A business that takes extra precautions to prevent fire damage. D. A person with high cholesterol and a family history of heart disease. Answer A. A driver who speeds and increases the risk of an accident. Explanation: a moral hazard refers to a situation where an individual's behavior changes as a result of having insurance coverage. For example, driver who speeds or engages in reckless behavior because they know insurance will cover the costs of an accident is exhibiting moral hazard. This increases the overall risk for the insurer. Question 18. Which of the following statements about term life insurance is true? A. It covers the policyholder for their entire lifetime with fixed premiums. B. It is designed to provide coverage for a specific period of time, such as 10, 20, or 30 years. C. It builds cash value over time and can be borrowed against. D. It can be converted into a whole life policy at any time without a medical exam. Answer B. It is designed to provide coverage for a specific period of time, such as 10, 20, or 30 years. Explanation: term life insurance provides coverage for a specific term, such as 10, 20, or 30 years. It does not build cash value like whole life insurance, and premiums are generally lower than for permanent life insurance policies. Once the term expires, the policyholder must either renew or let the coverage lapse. It does not accumulate savings that can be borrowed against. Question 19. In Montana, what is the maximum time a policyholder has to report a loss to their insurance company under a typical homeowner's insurance policy? A. 5 days. B. 30 days. C. 60 days. D. 180 days. Answer B. 30 days. Explanation: typically, Montana homeowners insurance policies require policyholders to report a loss within 30 days of discovering the damage or loss. Failing to report the loss within this time frame could result in the insurer denying the claim, depending on the circumstances and the terms outlined in the policy. Question 20. Which of the following is an example of a moral hazard in insurance? A. A homeowner buying additional coverage after a recent burglary. B. A person who increases their risk by engaging in dangerous activities because they know their insurance will cover the costs. C. An insured person making a claim for a covered loss after taking reasonable precautions. D. A policyholder buying insurance after experiencing a financial setback. Answer B. A person who increases their risk by engaging in dangerous activities because they know their insurance will cover the costs. Explanation: moral hazard occurs when an insured party engages in riskier behavior because they know they are covered by insurance, which could lead to greater potential for loss. This behavior is a significant concern for insurers as it can result in increased claims and higher premiums for all policyholders. Question 21. Which of the following is true about disability insurance? A. It provides coverage for injuries or illnesses that result in temporary loss of income. B. It only covers injuries that occur while the insured is at work. C. It guarantees full salary replacement for the duration of the disability. D. It is only available for individuals with pre-existing conditions. Answer A. It provides coverage for injuries or illnesses that result in temporary loss of income. Explanation: disability insurance is designed to replace a portion of the policyholder's income if they are unable to work due to illness or injury. Coverage may be temporary or long-term depending on the policy. It is available to people regardless of whether the injury or illness occurs at work. Though specific coverage may vary by policy, it does not guarantee full salary replacement. Question 22. In Montana, what is the minimum amount of liability coverage required for auto insurance? A. $10,000 for property damage and $25,000 for bodily injury. B. $25,000 for property damage and $50,000 for bodily injury. C. $25,000 for property damage and $50,000 for bodily injury per person. D. $50,000 for property damage and $100,000 for bodily injury. Answer C. $25,000 for property damage and $50,000 for bodily injury per person. Explanation: Montana requires a minimum liability coverage of $25,000 for property damage and $50,000 for bodily injury per person as part of the state's auto insurance requirements. These minimums help ensure that drivers have sufficient coverage to pay for damages caused to others in an accident. Question 23. Which of the following would typically not be covered under a general liability policy? A. Bodily injury to a visitor in a store. B. Property damage to a neighbor's house caused by fire. C. Legal defense costs for claims of negligence. D. Damage to the policyholder's own property. Answer: D. Damage to the policyholder's own property. Explanation: General liability insurance covers claims for bodily injury, property damage to third parties, and legal defense costs related to claims of negligence. However, it does not cover damage to the policyholder's own property. Coverage for that would typically fall under different policies such as property insurance or commercial property insurance. Question 24. Which of the following best describes a waiting period in health insurance policies? A. The amount of time the insured must wait before filing a claim. B. The period the insurer must wait to process a claim after receiving all required documentation. C. The period of time the insured must wait before coverage kicks in for certain types of claims. D. The time it takes for the insured to receive reimbursement for medical expenses. Answer: C. The period of time the insured must wait before coverage kicks in for certain types of claims. Explanation: A waiting period is the time between when an individual applies for health insurance and when certain benefits become effective. This waiting period can vary for different types of coverage, such as maternity benefits or mental health services, and typically applies to specific treatments or procedures. Question 25. In Montana, what is the minimum number of employees required for a business to be eligible to purchase workers' compensation insurance? A. 1 employee. B. 3 employees. C. 5 employees. D. 10 employees. Answer: A. 1 employee. Explanation: In Montana, businesses with 1 or more employees are required to carry workers' compensation insurance to cover workplace injuries or illnesses. This ensures that workers are protected in the event of an accident, regardless of the number of employees in the business. Question 26. A Montana homeowner's insurance policy has $1,000 deductible. If the homeowner experiences $5,000 worth of damage, how much will the insurer pay? A. $1,000. B. $4,000. C. $5,000. D. $6,000. Answer: B. $4,000. Explanation: A deductible is the amount the policyholder must pay out of pocket before the insurance company will pay for a claim. In this case, with a $1,000 deductible and $5,000 in damage, the insurer will pay $4,000 as the homeowner must pay the first $1,000 of the claim. Question 27. Which of the following statements about umbrella insurance is true? A. It only provides coverage for bodily injury and property damage. B. It provides additional liability coverage above the limits of standard policies. C. It is mandatory for all policyholders to have if they own a home or car. D. It covers damages resulting from intentional acts. Answer: B. It provides additional liability coverage above the limits of standard policies. Explanation: Umbrella insurance is a type of liability insurance that provides coverage above and beyond the limits of the policyholder's other insurance policies, such as homeowners or auto insurance. It helps protect against large claims or lawsuits that exceed the limits of standard policies, providing an extra layer of financial protection. Question 20. What is typically covered under a commercial auto insurance policy? A. Damage to the insured's own vehicle in an accident. B. Medical expenses for the driver and passengers. C. Property damage to a business's equipment and inventory. D. Liability for bodily injury and property damage caused by the insured vehicle. Answer: D. Liability for bodily injury and property damage caused by the insured vehicle. Explanation: A commercial auto insurance policy covers liability for bodily injury and property damage caused by the insured vehicle while it is used for business purposes. This policy typically covers the costs associated with accidents involving the insured vehicle, including damage to other vehicles or property and medical costs for those injured. Question 29. What type of insurance would a Montana business need to cover losses caused by cyber attacks? A. Business interruption insurance. B. Cyber liability insurance. C. Workers' compensation insurance. D. Property insurance. Answer: B. Cyber liability insurance. Explanation: cyber liability insurance is specifically designed to cover losses related to data breaches, cyber attacks, and other online threats. This type of insurance helps businesses mitigate the financial impact of a cyber attack, including costs related to data recovery, legal fees, and potential regulatory fines. Question 30. Which of the following is typically excluded from most homeowners insurance policies in Montana? A. Fire damage. B. Theft of personal property. C. Damage caused by flooding. D. Windstorm damage. Answer: C. Damage caused by flooding. Explanation: most standard homeowners insurance policies exclude coverage for damage caused by flooding. Homeowners who live in flood-prone areas are usually required to purchase additional flood insurance, often through the National Flood Insurance Program (NFIP), to cover this type of damage. Fire, theft, and windstorm damage are typically covered under standard policies with some limitations.